Ma'am, you can start the session.
Okay, thanks. A very good afternoon to everyone. First, let me introduce myself. This is Dr. Hibatullah Adam, Associate Professor and Director of Gender Center for the Global South. I will be responsible of moderating this session today. I feel greatly honored to welcome our eminent guest speaker, Dr. Lekha Chakraborty. Professor Lekha is a professor at National Institute of Public Finance and Policy and elected member of the governing board of Management International Institute of Public Finance, Munich, the World Association of Public Finance Economists. She is a pioneer economist in institutionalizing gender budgeting in India, was chief economic advisor of Ministry of Finance, Government of India in 2004. She is also research affiliate at Levy Economics Institute of Bard College in New York. Her key areas of interest are microeconomics of public finance, monetary policy linkages, financial inclusion, microfinance, gender budgeting, and human development, among other also areas of interest. That's why, ladies and gentlemen, you can understand now why we are feeling delighted today to have with us Dr. Chakraborty to share with us her expert opinion on a very important topic, public policy responses to geopolitical uncertainties. As we all have seen how Russian-Ukraine war is impacting the global economy with a higher commodity prices, deficit in trade balance, and instability in financial markets, as well as increase in geopolitical uncertainty. The war has influenced decisions of household and companies also. Uncertainties weighs on the effectiveness of monetary and fiscal policy transmission channels. So we are all looking forward to listen to Dr. Lekha talk on this topic. I will stop here now, and I would like to invite Dr. Lekha to start her presentation. Dr. Lekha.
Thank you. Thank you so much. Dr. Heba, in between, I cough a lot. Pardon me, okay?
Completely fine. That's okay. We are thankful that you have made your time and you have joined us.
Thank you so much. As Dr. Heba pointed out, I will be talking to you about the global uncertainties and the policy responses to the global uncertainties. And I will begin my lecture with the basic framework of the economic growth, which we need to look into. Then I will take you through the monetary and fiscal policy responses to these uncertainties that has happened globally. And as Heba pointed out, energy price volatility and the war in Ukraine, these are, of course, the geopolitical risk and uncertainty. But to add to that, we need to look into how the Western center bank, chief behaves. Because, as Raghuram Rajan pointed out once, whether those Western policies from the center bank, is it related to beggar thy neighbor kind of a policy, whether that's affecting the emerging world. So these are important concerns, and it has created a lot of panic in the global financial markets. So I will pitch my conversation based on these global uncertainties and risk, and then, how policy responses happened in terms of fiscal and monetary policy, we can unpack. Now, what about the economic growth? In a short time, there was a very high frequency revision in the number, in the growth rate, global growth rate and the growth rate of emerging economies, as well as in India. So those numbers we need not get into right now, but the basic analytical framework of the growth analysis is important here. For instance, the business cycle framework, if we are using to pitch the counter-cyclical policy tools in the time of these global uncertainties and risk, then we won't get the growth story correct. I will tell you in detail. Dating the business cycles in the time of uncertainties is a tricky game. For instance, if your growth from the prior pandemic levels or from the prior crisis level, that growth rate or the trend in the growth rate, if you analyze and compare this drop in the GDP growth, then, if the fiscal and monetary policy, these wings acting as counter-cyclical policy tool to get the growth story correct, that narrative can go wrong. Because from the prior pandemic levels or from the prior recession levels or from the prior crisis levels, the dip or the drop in the growth rate that happened mainly through, the permanent scars, through the structural issues. It's not just cyclical. Excuse me. So dating the business cycle is not quite a relevant analytical framework here. And you can take a look into the works by Geeta Gopinath and her paper titled "A Cycle is Trend." She co-authored that paper with Mark. There, this concern is raised. That work, speaks to you, excuse me, that work speaks to you in the context of emerging economies. The drop from the prior pandemic or from the prior crisis levels, the drop can be a permanent phenomenon. It cannot be just cyclical. So if that is the case, then fiscal policy acting as a counter-cyclical fiscal policy and monetary policy acting as a counter-cyclical monetary policy, those kind of policy handles may fail. And after the global financial crisis, we have seen the dominance of monetary policy in correcting those crises. But that limitations also we have seen, because monetary policy responses beyond a point will not trigger growth rate if we are getting into liquidity trap or even the negative interest rate quadrant. So we have seen that limitations of the monetary policy. But, when we look into this post-pandemic fiscal strategy or monetary policy strategy, we can see that there is a policy coordination, but in the fiscal policy, we can see a policy dominance. In case of India also, we have seen that fiscal policy has been very accommodative. Globally, if you look at the fiscal policy responses to this global uncertainties and challenges and risk, we can see that the fiscal policy has remained very accommodative this time. Accommodative in the sense, if you look at the numbers of the public debt and deficit, that is climbing up. And we learn to substantiate that high public debt and high deficit by arguing that if we are using that high public debt or high debt in case of reducing the output gap, or if you are using that for financing the capital infrastructure that can crowd in private investment, that can trigger the economic activity. So you need not worry about the high fiscal deficit or high public debt per se, because the global challenges we need to, tackle through fiscal policy dominance. But I can understand that the students can take, two stance on this. Like, many of you may not agree with me that high fiscal deficit or high debt, even in the time of pandemic, cannot be good. We need to, redesign our fiscal policy strategies differently by controlling the public debt. There, if you are arguing like that, there, my counter question is, we have lived through the fiscal policies throughout. Right now, time of geopolitical uncertainties and risk, we are not looking into the fiscal rules quite closely. Fiscal rules in the sense, the Maastricht Treaty, that we need to keep the 3% of GDP, our fiscal deficit. And India also, we have FRBM and many fiscal rules which articulates that, we need to keep the deficit under control. The revenue deficit needs to be phased out. That is a golden rule. Like, whatever you earn through your revenue receipts, use it for your revenue spending, not a pie more. So that whatever you borrow, that debt can be entirely used for the capital infrastructure. Excuse me. Yeah. But that narrative in the time of geopolitical risk and uncertainties and a post-COVID fiscal framework, whether that is working well, we need to have a relook. Otherwise, in due course, we need to get into the roadmap of fiscal sustainability. So when we frame that roadmap, what are the important ingredients to be looked into? Are we going back to the 3% of GDP, our fiscal deficit? These are important. Excuse me. These are important concerns, And in the recent one article, the former Finance Commission chair, Dr. N.K. Singh, has pointed out about the 4.5% of GDP, the fiscal deficit. In the post-pandemic fiscal framework, and especially in this context of geopolitical uncertainty, do we maneuver our fiscal policy path towards a 4.5 at the end of 2025-26? That's going to be a very relevant question. Because, Finance Minister Srimati Nirmala Sitharaman has articulated that we need not look into the fiscal rules right now. We have a medium-term fiscal framework, and that medium-term fiscal framework is by the end of 25-26, we need to control the deficit of 4.5. And as a case study, if you look into India, we have gone up to 9% of GDP. Our fiscal deficit has gone up to 9% of GDP, but that was articulated as a part of fiscal transparency as well. A certain part of the deficit is through the off-budget liabilities or off-budget borrowings. So those kind of components of the deficit is non-transparent. So we use this opportunity, this crisis, as an opportunity to clean up those mess and put it into the right kind of definition of fiscal deficit, and we cleaned up that OBB. So when I talk about a 9% deficit, is not entirely to tackle the risk and uncertainties, but that also contains this fiscal transparency exercise, not alone the accountability. So this is one exercise. And look at the principle of subsidiarity. When we talk about the fiscal policy framework, it's not just confined to the national level. The subnational governments are equally exposed to the macroeconomic uncertainties now. So when you look into the principle of subsidiarity, the government closest to the people also need to take decisions. And many of the decisions are happening at the level closest to the people, at the subnational government levels. So another question is, do we need to have an asymmetric fiscal rules in the time of crisis? Or do we need to keep that 4.5 or 3, whatever it is, symmetrical across the center and the subnational governments? So this is another question we need to grapple with. But hysteresis, if you look into, as an alternative to the business cycles, the scholars have started taking an interest into the hysteresis. Hysteresis is a wonderful framework to analyze the economic growth, especially in the time of crisis. Hysteresis is nothing but it's a dependence of economy on the history, in the sense that these short-term phenomena of the deviations, what's the long-term impact of that? That needs to be studied thoroughly. So it's not just about the cyclicality, but we need to look into the structural issues as well. So what are the structural issues we need to tackle? And for instance, if you take India as a case study, we have looked into agriculture, we have looked into the labor codes, and we have also looked into the power sector reforms. So these are some kind of structural reforms we need to undertake to get the growth back to the prior pandemic or the prior crisis levels. Now, for a moment, I'm stopping the fiscal policy responses. I will come back to this point, but I need to take you through what happened globally in the monetary policy framework. Of course, the world have moved from a kind of comprehensive monetary policy reaction function to a very precise inflation targeting framework over the years. In the sense, central banks need to focus on the price stability, nothing else. So that's a narrative now. So based on Taylor rule, we need to focus on, inflation targeting. That is pegging your policy rates based on the inflation which is a nominal anchor which you decide for your country. Then it's deviation from the inflationary expectations. And you also have to look into this output gaps. And this output gap is another important variable and empirically difficult to tackle in the time of crisis. And this output gap is a difference between the potential output and the actual output. Of course, actual output, we have the GDP numbers. We have that recent methodology of GVA plus fisc. We calculate that. And the fisc is nothing but indirect taxes minus subsidies. So we have the GDP, that's actual GDP numbers after the methodological revisions. But how do you calculate your potential output? So globally, this is a very controversial variable. One, the analytical itself, the analytical framework itself, as I mentioned to you earlier, you have to believe in cyclicality or in the business cycles, the moment you talk about an output gap concept. So that in the context of emerging economies, do you have distinct business cycles is one question theoretically you need to ask. And empirically, we tackled this output gap, especially the potential output, through econometric methodology of filtering it out. So we filter out the fluctuating part, the cyclicality, and call the trend component of the GDP series as our potential output. So that is also a little controversial, the methodology itself, whether we can call the trend as a potential or the output. The potential output can be even, envelope. What are the limitations of this econometric filters, whether it is HP filter or Kalman filters in coming with a number for the potential output. So these are concerns, but RBI is using the potential output. Many central banks, ECB, Fed Reserve, they're all using the output gap concept. But the difference between India and the Western world is in the context of US, it is based on employment. It's a native economy, but ours is a non-native economy. So we use the GDP number. So that's the basic difference. So in the context of native economies, their potential and actual, that output gap is calculated on the basis of employment. And in India, the employment is not a narrative of the central bank at all. We focus on the GDP, the targeting of the GDP. So you peg your interest rate based on the nominal anchor and its deviation from inflationary expectations and the output gap. So here there are many questions that inflation targeting itself is keeping the economy at the low level equilibrium of growth. These are the questions now scholars put forward. And another important question is, do we tackle the inflationary expectations channel or expectations that is coming from the supply side shocks? Because you get it when you have food inflation or the fuel inflation. And because of this energy price volatility, the fuel inflation is a reality. So how do this inflation targeting framework tackle these supply side constraints or supply side shocks or the global supply chain disruptions that causes inflation? Then, inflation targeting framework, can it, effectively anchor the inflationary expectations if the sources of inflation are elsewhere? It's not a monetary phenomenon. Then how do you change your repo rates and arrive at a kind of inflation containment? So these are the questions raised by the scholars and ask the efficacy of the inflation targeting framework itself. Now, the policy rates, if you look into, in the prior pandemic times, of course, we lived with very high interest rates. But in the pandemic time, especially in the context of India, since May 2020, we are in a mood to keep the interest rates lower. And across world, central bank kept the interest rate lower because the growth recovery narrative was given prominence. Then came this geopolitical uncertainties of mounting inflation globally. So to tackle the inflation, the central banks are now in a competition to raise the interest rates. So it's a kind of, we have raised the interest rate recently. On September 30th, we had the last MPC, the Monetary Policy Committee. They recommended 50 basis point rise. So we are in the mood of getting into the hawkish kind of an interest rate regime. And, other central banks are also not different. Bank of England, ECB, J. Powell, they're all in mood for increasing the interest rates. And in the Jackson Hole meetings, we look into the Jackson Hole meetings to get the narrative of the Western world, of the US Fed Reserve. What exactly are they thinking about their policy tools in the monetary policy stance? Because that affects the emerging markets in the sense, if you take the gist of what has happened in the Jackson Hole meetings, you must have seen Geeta Gopinath has given us that policy brief that is coming out of the Jackson Hole meetings. So she highlighted 3 points. What's coming out of Jackson Hole meetings? Policy coordination is crucial. That's a fiscal and monetary policy coordination. The second is inflation containment is the narrative globally central banks are focusing into. It's not the growth recovery process in that particular sense. So that sequence of giving importance that has gone from the growth recovery to inflation containment. Then she also highlighted the climate-related risk and uncertainties we cannot ignore anymore. So that's another debate. Can the central banks and the monetary policies can get into these kinds of risk and uncertainties emanating from climate change? So these are the 3 important takeaways of the Jackson Hole meeting. Now let's unpack it one by one. The interest rates are getting higher. Of course, that is very crucial for the financialization of savings, to tackle the inflation containment, and also to prevent the capital being flighty. You can see in the emerging world, in the fragile economies, Brazil, Turkey, and even in the context of India, our macroeconomic fundamentals are quite all right, but we experienced a capital flight, and the rupee is on a free fall mode. And what exactly is happening? To stem the rupee, instead of intervening continuously on the high frequency basis in the currency markets, we need to look into the root cause of what exactly is happening. Why the rupee is shaky, why the capital is flighty. Then we will get the answer to that. It's a Western world. J. Powell, the central bank chief of US Fed Reserve, is in a mood of increasing the interest rates, and that is creating panic. And the dollar is getting stronger, and we are losing the FPIs, the foreign portfolio investors. They're taking out money, and they are more comfortable in putting the money where the interest rate is higher. So here, hot money by definition, it's a component of your foreign capital which responds to interest rate differentials. So when the interest rate differential is huge, this money is flighty, and it moves to the countries in which the inflation interest rate is higher. So that's why the capital is flighty. And of course, this energy price volatility and the other supply chain disruptions, that's eating up the import bill. So the import is getting costlier. So your X minus M is also quite high right now, and your current account deficit is widening. So how do you look that issue or into the current account deficit? In the time of Raghuram Rajan, you must be remembering that our current account deficit has gone up above 4%. It was between 4 to 5. And we were conveniently, financing that current account deficit, the mounting current account deficit, with a capital account. So you need to look into this BOP in a holistic manner, looking into the current account and the capital account. But if you can finance the current account deficit, through the capital flows, you are okay. But the moment when the capital is flighty, then things started becoming shaky. Now, how to stem that? How to prevent the capital flight? We tried in 2013, when the situation was worse than this time. We tried capital controls. We tried high frequency intervention in the foreign markets, in the currency markets, but they were partially successful. So what helped was interest rate defense. And right now also we need to do the interest rate defense, but what's the kind of the policy dilemma here? Why we are unable to get into the neutral stance from the accommodative stance? because it can affect the growth recovery process. That's exactly where the policy coordination needs to be playing well. In the sense, the fiscal policy dominance for the growth recovery process is quite crucial right now, when the monetary policy is focusing on in the interest rate, on the inflation containment, using the interest rate as a policy tool. Now, get into another policy tool which central banks all over the world tried, that is liquidity infusion into the economy. And the liquidity infusion was tried, and emergency, pandemic purchase of the bonds, and so many things happened. Right now, we are in a mood of normalization procedure by taking back the this emergency pandemic packages which we announced, and it's a kind of sucking out the liquidity from the economy, and it's a kind of normalization procedure. It may be a premature thing to do because it can affect the growth recovery process, but we can't wait for wait more because of the rising inflation. And also from this liquidity, it's also affecting the economy. And in the context of India, the Operation Twist, which was announced, that was quite an experimental tool. The Operation Twist to increase or to improve the liquidity infusion happened like this. You simultaneously buy more long-term bonds or securities and simultaneously sell the short-term securities. In the process, the debt maturity pattern, or the structure of the maturity pattern of your debt market, that's getting long-term. So you are postponing your refinancing risk to future so that you get enough time to maneuver to the robust growth paths, strategies. So these are the ways in which, we tried by imputing or by increasing the liquidity into the economy. But right now, we need to take back the liquidity. And you have seen the empirical evidence, that, though we tried the credit infusion and all, the banks were conveniently parking their money back in the, RBI. That is 100% safe and liquid. And, they find it very convenient to park back the government securities in the reverse repo rate. But now the reverse repo rate is redundant, and we have introduced another policy tool. So the global mood is now to raise the interest rates and to absorb the liquidity infusion that has happened in the pandemic period. So these were the two important tools. And now coming to the climate change question. And I need to tell that there is a tug of war here. And, many economists, including Raghuram Rajan, has raised concerns regarding monetary policy getting into the climate change related risk and uncertainties, because that can go little political. So can we do that? That was a question raised, because the monetary policy reaction function now, as I mentioned earlier, now focusing exclusively on the price stability. So that's their mandate. So if that's a mandate, and of course, financial stability is closely correlated to the price stability. So why do you want to deviate from this monetary policy strategy and getting into the climate change related risk and uncertainties? So that was a question raised. And the political economy of the climate change can be better tackled by the fiscal policy rather than the monetary policy. So that's the way it was argued out, And here you can understand that the political economy, for instance, like distinction between the green bonds and the brown bonds, can central bank gets into these questions of investment related questions and can go political in deciding the green bonds. So there, the answer is what ECB has done. The European Central Bank, Christine Lagarde, is quite vocal about greening of monetary policy, and she announced stress test, and Bank of England was the first central bank to announce a stress test. That is a green stress test, whether the climate change related risk and uncertainties is affecting your financial investment. So the top bankers, investors are asked to produce statements related to the stress test. So RBI is also in a mood to go ahead with greening of monetary policy. You can read those chapters in the State of Economy report and the bulletin, RBI bulletin. So we are, getting into this greening of monetary policies. RBI governor is making right noises about that. But this question of the tug of war between monetary policy and fiscal policy remain. And what exactly is the argument? Let the fiscal policy do that. And what are the fiscal instruments to get into these climate change related risks and uncertainties? The fiscal instruments, in the sense, of course, one is green bond. In this year, early this year, India has announced green bonds. It's like you tackle the financing pattern of your fiscal deficit through the bond financing, right? So within the bond financing, you're earmarking a particular kind of bond financing to the green infrastructure. So that's the experiment we have started now. Green bonds, that concept is not new. It is quite relevant in the context of private sector. But what is new? The government, the role of government, when it comes to the financing pattern of deficit, when you look into the bond financing of deficit, you are earmarking a portion for green infrastructure. And we are waiting for the estimates. It's just announced last February. So we have to look into this estimates, whether it's going all right, but this is also opening a kind of thematic financing of deficit, thematic bond financing. So you can ask me a question, if this is earmarked for greening or the climate change related concepts, can we open or earmark, the bond financing for human development purposes? Can there be gender bonds? Those kind of questions are now becoming very relevant, especially when Argentina, they floated gender bonds. So these are the new kind of questions, because economic growth is not an end in itself. If our post-pandemic strategies and the strategies of the fiscal and monetary policies, ultimate goal is economic growth, then we are erring on the side of caution, because we need to go beyond economic growth, especially the humanitarian crisis which is mounting right now. Unless we focus on those kind of concerns, because COVID was a human tragedy. So the post-COVID strategy need not be to into the economic recovery path, whether it is V-shaped, U-shaped, to look into the human related elements as well. So this is another important component of the public policy response, in addition to the growth recovery responses and the climate change uncertainties and the risk related responses. And how do you tackle this humanitarian crisis? What are the important packages or the announcements across globe related to that? Then you need to unpack 4 components. One is food security. And in the countries where civil war was a reality, when the food security was not ensured, when the social security was crumbling, but we haven't seen any civil war in the context of India. We were under control, because we have given, especially at the subnational governments, we have given much importance to food security. And second component related to the human development related responses to the risk and uncertainty is social security measures. Everything market cannot provide, especially in the time of crisis, we need to strengthen the social security measures. Third component is social infrastructure. I know that the predominant narrative of the rise in deficit and the debt is to tackle or to finance the physical infrastructure, that's a capital infrastructure, but we need to focus on social infrastructure as well, because in this moment we cannot say that capital spending or capital expenditure is good, revenue expenditure is bad. No, that can go little wrong, that assumption. We need to focus on social infrastructure, because especially in the post-COVID strategies, we need to look into the digital divide that has affected education sector and the health sector. That our estimates, it's just below 1% of GDP at the national level, the kind of public investment in the health sector. So we need to look into these social infrastructure related policies in case of education, health, water, sanitation. So many components related to the social infrastructure, in addition to the social security measures and food security, needs to be given importance. And the fourth component of this humanitarian concern or the human development related responses to the risk and uncertainty is employment opportunities. Everything else failed. So what the government needs to be done, government needs to act as an employer of last resort in the time of uncertainties and risk. So how the government acts as an employer of last resort? Government needs to guarantee jobs. But if you look into the numbers, you can see that, we are not in the mood of redesigning the employer of last resort policies. And we are not into universal basic income either, because it's a question of public policy narrative here, whether you are getting into participation income or basic income to tackle this risk and uncertainties. Participation income, in the sense, the narrative of the public policy needs to be ensuring cash transfers. No, participation income is ensuring the people's participation in economic activity. And basic income is ensuring cash transfers into the hands of people to avoid a crisis. So participation income, by providing the employer of last resort policies, by providing the employment opportunities, guaranteeing, that's also protecting the labor rights. And on the other hand, basic income. This can also be a matter of debate, like what kind of narrative across globe, the public policy responses, we need to unpack and see what was their narrative. But in the context of India, we can, clearly see that our narrative was participation income relative to, the basic income. We have not announced any major, cash transfers, because we feared a kind of overheating of the economy doing all that. And, some of the economists also cited the example of US economy where, Janet Yellen, the Treasury Secretary, was giving, a lot of, transfers into the hands of people. And, that could also lead to inflation and overheating of economy. So we need to see, we erred on the side of caution, because, recovery is uneven. So we can, on one side, we can proudly say that it doesn't happen, that overheating of economy, that has not happened. We were only providing the targeted economic stimulus programs, so that helped. But when you look into the recovery process, you need to understand that the recovery is uneven. So when we talk about a V-shaped or a U-shaped recovery, India is recovering for whom? So a kind of state-business relationship is supporting only a component of people to recover. What's happening to the people at the basic or the lower end of the pyramid? Do we have enough policies to support them? Or do we need to announce more? Because the recovery is uneven. So these are the questions we need to ask. And it's not the story of India alone. It is happening globally. And of course, what has happened to Sri Lanka, those kind of, fear, or the kind of, that collapse of the government or a failed state, that will not happen in India, basically because our financing pattern of deficit, if we look into, that's not, predominantly external financing of deficit. So we are safe, because earlier there was a discussion related to the sovereign bond, and India was in a mood to get into the foreign markets to, this bond financing, but it was prevented quite successfully or effectively. We haven't done that. And if we look into the financing pattern of deficit, it's predominantly internal. It's not external. So we are safe if you look into the external debt component. So we will not replicate that Sri Lankan experience where there was a huge external debt, the presence of China, and those kind of external financing and the conditionalities. That's not in the context of India. Next question: how we use the fiscal space. And the debates related to the populism and the freebies right now. And in Sri Lanka, of course, the use of fiscal space was quite tricky. They were getting into incentivizing the calculus of consent of the people. And those policy announcements were not related to the predictive spending. So now, in India, it's a strong debate whether we can do more freebies, or do we need to take a relook into the fiscal space available to announce the freebies. So here, this question can be tackled against a backdrop of the role of state versus market. Because the role of state in the context of risk and uncertainties is, of course, providing the public good. That doesn't change at all. Public goods in the sense, the goods which are non-rival in nature and non-excludable. So we are not questioning that, whether there is risk and uncertainties or whether it's a normal time. Now, the next question is about the externalities. Some of the goods, merit goods, if you look into the externalities, the social benefits, that's greater than the private benefits. So government can provide those goods which, do, excuse me, we have the positive externalities. Now, clientele-based privateness of the public spending, that's where we need to look into how much we can design this or increase the privateness of the public spending. That's quite tricky. The clientele-based announcements, when we have, fiscal space limited. So that we need to take a relook. Now, you can ask me whether there is a consensus regarding what is freebies, because that is incentivizing the calculus of consent. And these are the times of revenue uncertainties, because we have geopolitical risk and uncertainties as a backdrop. So within this revenue uncertainties, or within this limited revenue right now, when the tax buoyancy itself is in question, within this limited fiscal space, what is that space available for designing, more freebies? These are the important questions raised. And now, there should be a strong debate in the context of risk and uncertainties, what we can call as freebies. So that itself requires a debate, because there is no consensus related to that. And, education and health, free education and health, can it be freebie, or whether that is relevant for the, to tackle the humanitarian crisis we have undergone in the time of pandemic and in the post-pandemic fiscal strategy. We need to give importance to a health and education, and providing that at the reasonable cost or free. That's very relevant right now to protect the achievements we have already done in the context of education and health. Otherwise, this digital divide can make our life more miserable. We need to look into the education and health sector, and can that be called as freebie? Then in subnational governments, you provide free cycles to the girls. There, gender budgeting is coming as a public financial management tool. That against a backdrop of risk and uncertainties, we need to take a relook into the economic stimulus packages. These are the times to get into normalization procedure. Fiscal policy cannot be accommodative forever. We need to take a relook into the public debt and deficit. So those kind of fiscal strategies, when we plan, then when we take a relook into these components related to incentivizing the calculus of consent, certain public financial management tools like gender budgeting, climate finance, that responsive budgeting, climate change related financing, those kind of public financial management tools cannot be called as freebies, but that is a long-term PFM tool. So those long-term PFM tool, we need to give more importance in the time of risk and uncertainties, especially when we need to roll back the economic stimulus packages to protect, the fiscal, discipline, because we are into a fiscal accommodative stance, and this cannot go on forever. And we need to get into this medium-term fiscal consolidation path. So how we need to do the fiscal consolidation? On one side, tax buoyancy can be an effective method of fiscal consolidation. On the other hand, if the taxes are not buoyant, we need to get into the revenue expenditure compression. And this expenditure compression can affect the recovery process. And if the expenditure compression happens, then that is a fiscal austerity mode. And the fiscal austerity mode as a post-pandemic strategy, that can go wrong. So what could be that effective or optimal fiscal consolidation path? We need to take a relook. So these are concerns, because on one side, raising the interest rate by the monetary policy authorities is becoming more and more crucial because of three reasons I mentioned earlier: to tackle the inflation, then to tackle the financialization of savings, because we have seen that the savings that's coming down globally. So the savings, it's of course a function of income, and also it's a function of interest rate. So if the interest rate is going down, it affects the financial savings. And if you're getting into the negative interest rate, then it's affecting the savings pattern. And that's a matter of concern, and you need to increase the interest rate. Then, as I mentioned earlier, rising the interest rate is important to tackle what's happening in the Western world. Otherwise, our capital will become flighty if the US Fed Reserve is in the mood for reducing their balance sheet, or in a mood to increase the interest rates in turn. That will affect the emerging economies, forex, or their currency, because the dollar is getting stronger, and the capital is getting responsive to the places where especially the hot money. When I mentioned about capital, I'm mentioning about the hot money, not the stable FDI. That's relatively stable, but I'm talking about the foreign portfolio investors. They can they can be little volatile, and they respond to these interest rate differentials. And on the other hand, if you say that we don't need to have a policy coordination, we are getting back to the fiscal austerity mode or fiscal consolidation mode. We can't keep the fiscal policy accommodative by high debt and deficit. Then again, we are getting into a tricky mode. So it's a really a tough situation how we are going to play it out, and the policy coordination is very crucial right now, because we need to keep the interest rate lower to provide the cheap credit, to provide incentives to investment. But we can't do that because they're globally the inflation is mounting. So it's a very tricky situation. That's why the articulation of the central bank governor in the last MPC meeting, that we are not getting into the neutral stance right now. We are still on the withdrawal of that accommodative stance. And so that's a way the narrative of central bank governor. So he has not spoken yet about a narrative of soft landing or getting into neutral policy stance or anything. So that's a way these two moved. In addition to fiscal policy and monetary policy, we need to take a look into what's happening in the field of economic diplomacy and in the field of international trade, international relations. There you can see a retreat of globalization. So this retreat of globalization or increasing protectionism, that kind of wave, that's also affecting the economy from recovering at the faster mode. So whether protectionism is quite a good policy tool right now, because in many countries on the mode of protectionism, and India is also using tariffs and non-tariffs, we are getting into a protectionist mode. So that retreat of globalization, that can also affect the growth recovery process. So these are the broad things I thought that I will give you as a framework. Now let us take questions, and I will try to answer your concerns and clarifications and the questions in the we can go up to 5 o'clock. That's what I thought, that more voices from the participants, from the students, will be good. Okay, I forgot to mention one thing about the digital infrastructure. I touched upon that, but there's a tendency now to move to the digital currency, to the digital world. And we also talked about this high risk, high return asset like crypto. So the world is in the mood to digitize. So whether that kind of policy tool is relevant to tackle the risk and uncertainties that is happening right now, if you ask me, my answer is yes and no. And no in the sense, of course, unless we have a great regulatory framework, getting into this digital mode, that can be quite tricky. So that regulatory framework needs to be given emphasis the moment we talk about the central bank digital currency. But crypto is not a legitimized legal currency, but it is a high return, a high risk, high return asset. So it's a kind of an asset. But using the tax policies, we try to curb those kind of speculative activities in the time of the risk and uncertainties, because it can affect the financial stability. So the central bank governor is not in a mood to support crypto and all. And we have announced that you need to pay tax for the cryptocurrency. So we are getting into, but again, there comes a question of data privacy. The moment you think on one side, digital currency is very helpful in financial inclusion, because in many regions it's highly unbanked. So when there are regions in which things are highly unbanked, this digital currency can be an important mode of financial inclusion. That's exactly what the Treasury Secretary Janet Yellen also, she supported a digital dollar by talking about the financial inclusion. But in the context of India, when the digital divide is quite strong, whether this digital currency is a good way to tackle the risk and uncertainties, we need to look into. And also the question related to the data privacy, and of course, related to the regulatory framework. So we need to wait and see how it gets unfolded. And thank you once again, Dr. Heba Adams, for having me for this conversation with the students. And, our relationship is long-term. I met her in RIS when we talked about the G20, and she was a part of a big delegation that time. And so glad to see you are back to India, and you are here, helping our country, and you are the part of the narrative of the policy prescriptions of what's happening against the backdrop of the risk and uncertainties. Over to you, Dr. Heba. Thank you so much.
Thank you so much, Dr. Lekha, for for sharing with us this insightful and informative presentation, and your kind words about me. And now, as you have mentioned, we'll start our Q&A section. So I request please our participants, if you would like to ask questions, you can raise your hand and ask your questions by using your mic, or you can write in chat box. And I will take the responsibility of reading your questions and sharing with Dr. Lekha. Also, Dr. Lekha, if you'd like to turn on your camera, you are most welcome to turn on your camera. So, any questions? So now till students start writing their questions, and our participants, because we are having also faculty members, they have joined us. I'm having a question regarding, I'm gonna leave India for a while and just go to Africa, and low-income countries, fragile economies there in Africa. As we have all read the IMF forecast that governments that in low-income countries will surpass 50% of their GDP because of Russian-Ukraine crisis. In your opinion, Dr. Lekha, how can governments, speaking about governments, stop governments, especially in fragile economies in, let's speak, for example, about sub-Saharan Africa, how they can stop the negative impact of Russian-Ukraine crisis on their GDP, and how they can stop like having more negative impact on economic and social aspects, how they can avoid a long-lasting negative impact, especially that the whole world is not in a good position now to assess them. They need to assess themselves.
Thank you, Heba. For the time management, let me take the questions first, maybe 5 or 6, and then I can answer together, so that we will give more time for. Yeah, thank you.
Sure. I can see also now we are having one hand raised from Dr. Firdaus.
Yes, am I audible?
Yes.
Yeah, thank you very much. This was indeed a very insightful lecture from the professor. So I am having, question as a written article by Nuran Rubani, who has, predicted the 2008 global recession crisis, and he has forecasted that. Recently, he wrote one article, namely "Long Run Ugly Recession," and he is in that article, forecasting that in 2022 from December, and it will remain. There will be a great recession. It will remain till 2023. So I want to, ask this question. What are your take on this, Professor? That he is, asking that there will be a global recession throughout the world, and it will remain from 2022 to 23rd. So I want to listen about this. What are your take on this? How similar it is about the global crisis of 2008, and how it will affect. Thank you very much.
Sure, I'll do that. Yeah.
Okay, thank you. Vartika?
Good afternoon, Professor. Thank you for the wonderful presentation. So in your presentation, you mentioned about the foreign exchange market with regards to the recovery. So I would just like to ask that how can we use the foreign market and the digital currencies, and how can that be used to recover what we've lost during the COVID and the post-COVID era? Thank you so much.
Thank you. Yeah.
So, Professor, I think there is no questions for time being till they write or raise their hands. Can we take these 3 questions?
Oh, I was muted. I can do that. Yeah, let's take these 3 questions. And thank you so much, Heba, Fidos, and Vartika.
Vartika. Yeah, Vartika.
Vartika. Thank you so much. And Heba, your question about, the fragile economies and the, the context of the sub-Saharan economies, that's very relevant. We need to look into the resource handles they have, and how they are going to tackle the energy price volatility, and how they can redesign their policy, both fiscal and monetary. So here, to tackle the energy price volatility, I don't know that, many countries are getting into the strategic energy reserve they have as an alternative to tackle this energy price, energy oil, this energy price volatility, or this oil crisis, excuse me. But how much we can do that, as a counter policy using the strategic oil reserve is a matter of concern. Of course, even prior to the war in Ukraine, when the OPEC was moving towards a kind of a cartelization by artificially reducing the, oil production, this kind of responses to the using the energy, the strategic energy reserve, was a predominant response. But those kind of policy moves, how partial it can be, how ineffective it can be, you can understand. But that was one of the main ways in which we try to move. Now, the revenue instability. In the time of uncertainties, if you get into the narrative that the revenue stability is the basis of expenditure priorities or design, then especially in the context of fragile economies, when the revenues are uncertain, then, they have to get into a kind of austerity mode. And you talked about the context of European Union. And European Union, of course, that European Union, what holds that, entity together, if you look into those questions, I have read a paper in the Brookings paper, there, Alberto Alsina and his co-authors. So they looked into the question whether this European Union is a feasible project even prior to these geopolitical uncertainties and the pandemic. There, the questions were like, it was an economic integration, but there are a lot of, as you mentioned about the social, cultural, there are a lot of fissures that's happening right now. Brexit is happening. So we can see that, a kind of non-economic narrative is also equally predominant in addition to this global risk and uncertainties. So those questions we need to tackle. And energy crisis is one. Non-economic predominant ways of, what's happening, which related to the cultural fissures, is another important issues across globe. And third is revenue uncertainties. There, in the context of sub-Saharan countries and in the context of European Union, you can see that natural resource taxation is a predominant method of taxation or the kind of revenue mobilization, unlike India. In India, we don't have, even in the intergovernmental fiscal transfer mechanisms or even in the subnational national governments, we don't have a predominant narrative of natural resource taxation. So that natural resource taxation as a predominant method of revenue stability or the revenue requirements to enhance the revenue requirements, that's given focus across globe as a policy response in the fiscal front. Then third is the fiscal sustainability path. Fiscal sustainability path is particular to one country context. It's not a global thing. Now, people are getting to the question of credibility exercise. Credibility exercise in the sense, in the time of uncertainties and risk and uncertainties, the fiscal transparency is one thing, fiscal credibility is at another. And when you look into the numbers of sub-Saharan countries, the fiscal credibility or the fiscal risk itself is mounting. In the sense, what is announced and what is actually translated, there's a big deviation between these two. Of course, you can understand that a part of it can happen due to randomness, but the part can happen because of the state-business relationship and the kind of, you can understand that inequality is widening in the time of pandemic. But in the context of sub-Saharan countries, whether that inequality is widened because of the deals that is happening against the backdrop of risk or uncertainty. So those questions are also getting more important about the credibility, about the kind of fiscal risk that's coming from the deals that's happening in the economy. So these are the questions we need to look into. Now, the final point is about the way we redesign the fiscal rules and why we should have the fiscal rules. And can we redesign the fiscal rules globally in a symmetric fashion? No. The sub-Saharan countries, European countries, emerging countries, the kind of policy responses were different to this risk and uncertainty. So there should be an asymmetry in the way in which we redesign the rules-based economics. That is another predominant strategy which we need to look into. Rules-based economics in the sense, now the discretion of the policy maker in the macroeconomic space is getting reduced. Of course, including the fragile economies, we are getting into a rules-based game, both in the fiscal and monetary policies. So how we redesign those rules-based macroeconomic policy is another important way in which we need to tackle. And of course, those stories will be entirely different in the context of, fragile and sub-Saharan African countries when compared to, the emerging countries or the developed world. So it is, of course, not homogeneous. It has to be heterogeneous. And, if you have more supplementary questions, I would love to answer you, Heba, but I'm getting ahead with the question of, Firdaus. But of course, I can get back to you if I have not clarified certain points you have raised. Firdaus' question, of course, Rubini is my favorite author as well. And, I do read Rubini's articles. And as you pointed out, his vision or his the kind of prediction about the economy, I do enjoy that. And in the recent article, he talked about the central bank policy stance, and he talked about a persistent school and a transit school. And here, you can understand that globally, central banks or the monetary policy stance have moved ahead from transitory school to what you call as persistent school. In the sense, earlier we thought that these mounting inflation was transitory, and that narrative was with all the central banks for a long time. But Rubini rightly pointed out that that school of thought is quite wrong, and this persistence. And very recently, we started accepting the persistent school that this inflation, the mounting inflation, is not transitory, it is persistent. So that, his vision about that, persistence in the inflation, that we embraced very late. Now, we are into a mode of raising the interest rate in a panic mode. So earlier, had we been into a, systematic raising of the interest rate or a systematic, normalization procedure, this panic increase in the interest rate and the panic kind of, signals that's giving to the financial stability or the financial markets could have been avoided. So that, articles, you can understand that what Rubini has written that has become reality even in this context of rising risk and uncertainties. Now about the recession. And here, the global recession is going to be a reality. We have seen that Germany, the numbers are coming out, the stagflation. But here, when the monetary policy has got limitations, then if you're getting into the mode of fiscal consolidation, then we will again, we are again, not taking the chance of getting into the recovery path. Because if you start the discussions once again related to the debt sustainability, which we are right now doing, and we are talking about the fiscal consolidation path, because that is going to upset our economy further. If you're getting into that mode, when the monetary policy is into the inflation containment exercise, then we are erring on the side of caution. So that's what I do wait for Rubini's take on the fiscal rules and fiscal consolidation, and he's given right noises about fiscal policy. It needs to be accommodative in the time of these kind of risk and uncertainties. Otherwise, this recession is going to mount only. And earlier, we lost a chance in 2013. In the post-2013, the global financial crisis, we thought that the monetary policy is going to be the effective policy tool. But after a point of time, we understood that when the liquidity trap happened, when the economy was not improving, it was not a one-to-one relationship between the monetary policy tools and growth recovery. We had it. So unless you give enough emphasis to the fiscal redominance, and unless you keep the fiscal rules just as a contingent fiscal rules, but don't use it. And along with Rubini, Firdaus, I also want to talk about what Oliver Blanchard, another eminent economist, have spoken. He talked about, that is even prior to the pandemic in 2019, when he was giving the presidential address in American Economic Association meetings. He gave the the course correction to the fiscal policy. And his last slide, I do remember, I was there in Atlanta to present my paper. In the last slide, he mentioned that public debt may not be good, but it is not bad either. So if you are in a time of recession, better you keep your fiscal rules just as contingent fiscal rule, but don't use it. So that's exactly what he has mentioned. And you focus on two macroeconomic parameters. And Rubini has not spoken about those parameters, but I am quoting from Oliver Blanchard. He talked about two parameters in the sense your R and G, the real rate of economy and the real growth of economy. So if you are in a fiscal unsustainable mode, if your R is greater than G, then you are in trouble. But if you can have high fiscal deficit, but you grow out of your debt, then you go for high fiscal deficit or high debt. That's exactly what he has spoken. And that's very relevant in the time of risk and uncertainties like this, that you need to look into, have a check on R and G. And even the investors' confidence and the rating agencies, the Moody's rating agencies, they also started emphasizing on R and G, the real rate of economy and the real growth of interest, the cost of the credit and the growth of economy. So if you're growing out of it, then you are not getting into unsustainable debt situation. So that narrative needs to be given importance. So it's a Rubini as well as Blanchard. The narratives by both of them, they're very relevant right now. Now, thank you, Firdaus, for that question. Now let me get into Vartika's question of digital currency. Can it solve this crisis of what's happening in the currency markets right now? Digital currency and the financial market instability, of course, there could be a link. But what we need to do right now is not, reinventing or innovating related to the currency, but regarding the interest rate defense. Because I will tell you, the root cause of the volatility of the currency, that will not change even if we get into a digital mode. That's not going to protect the currency, weakening of the currency. But what can make, what can prevent the weakening of the currency? If you look into the root cause of what is creating the global instability in the financial markets, it's because of the interest rate differentials. So you need to play a little different. Of course, we are doing a high frequency intervention in the currency market. Whether going digital, that can prevent the rupee from becoming volatile or any currency from becoming volatile. My answer is partially no. But the question, your concern, the answer to your concern lies in interest rate differential. So interest rate policy defense could be more effective than you play with the currency stability or going digital related to the CBDC and all. So that's my limited take on your question, Vartika. Now I thought that I answered all the questions. If you have any supplementary questions, please raise those questions, and I would love to answer that. Over to you.
Yeah, thank you so much, Professor. So we have first a question from Dr. Soham Das. It is he has written his question in the chat box. So he's saying that given the ongoing crisis, oil crisis because of Russian-Ukraine war, developed countries they are much more able to depend on renewable energy and green energy. So because of the high level of advanced R&D existing there. With regards of developing countries or these developed nations, like I have mentioned in sub-Saharan Africa, in your opinion, how should the fiscal policies be regulated so that the horizontal inequality do not widen further due to a shift in energy resources from traditional to renewable one?
Oh, that's wonderful. Let me take more questions because I can address 3 at a time. That's okay. A wonderful question. Yeah, tell me.
Okay, I'm seeing Dr. Firdousi is raising his hand. If you are having a follow-up question,
sure.
Please.
Thank you very much again for this opportunity. I'm having next question. So the next question is, a bit different. I want to know that, the crisis, recession crisis, they didn't hit Chinese economy. Will China be, the exceptional for the forecasting this recession? This is one. The second one is a micro level question regarding India. It will be, a bit different question again. That, as we are, transferring digitalization is going on and there is growth and development led by digitalization. But my argument here is because of digitalization, there is widening poverty rates in the country because the rich are exploring the digital know-how and the poor are remaining. It creates, development gap. What are your take on this, ma'am? Thank you very much.
Sure. Firdaus, can you repeat the question related to China? Second question I understood.
The first question was that China economy is not, there is the experience of the China economy. They have not been hit by, past recession of 2008. There was not, so much impact on China economy. Will China economy be the exceptional in upcoming forecasted this recession, which Rubini and other economists are, forecasting? And why China economy has not been hit by the recession? How exceptional they are doing?
Okay.
So I think that's all, Professor. There is no other question now.
Yeah, sure. Let me take Sahan Das, right? Sahan's question on oil crisis and developed countries can respond to it effectively, but what about developing countries, right?
It is about, he's saying that because of the crisis, developed countries now, they will depend more on renewable energy. And
Okay. I lost that focus on the renewable thing. That's a very good question, And in India, not only India, all the countries, need to produce a national adaptation communication by November. That's our commitment, the Glasgow commitment, right? So we are trying to articulate the kind of resources now available to tackle this adaptation, not just adaptation, and also the kind of just transition, that's going to happen. That's exactly his question. That what's a kind of just transition from this fossil-related economy and this oil-related economy to non-conventional or that kind of renewable resources. That question here in that bargaining field, that bargaining, the developing countries need to bargain more for, giving more time. We need to buy time for a just transition. Because as you rightly mentioned, developed countries can transit from, fossil fuel related economy to, that renewable energy faster than the developing countries. In the context of developing countries, we need to address the energy poverty, as you mentioned. And the energy poverty and the energy crisis is quite huge. So what's the method, or what's a tool, or what's the policy space available for the fragile economies and the developing economies for a just transition? This was an important question. And, in the Glasgow commitments and all, we know that we committed that over the years, by this particular period, we need to keep the net carbon level zero. All those commitments are there. But, we need to focus on just transition and how this is going to happen. In that bargaining, if you look into the energy consumption, of course, as you pointed out, the energy consumption of the developing countries or the fragile economies is not that much. It is insignificant when you compare that to the developed countries. But when it comes to who pay the cost of it, the adaptation costs, then the costs are not equally shared. So now the narrative which is put forward by India and the developing countries is how we can finance it. It's not the question of internal matter that we will, take the policy prescription of moving towards the non-conventional or the the renewable sources, but what is the kind of responsibility and the financing support that's happening from the external front for this just transition. So that's the predominant narrative, and that's a way these policy prescriptions are going to get designed and going to be produced in the next meeting, which is, I think Heba knows that in Egypt, it's going to be in Egypt, a city in Egypt, the next committee, this climate related COPs meeting. Yeah, it will be in Egypt. So in that meeting, absolutely. So in that meeting, we need to, focus more on the energy poverty aspects, because, India is energy poor. As you mentioned, that divide, and also Firdaus mentioned that divide between rich and the poor is widening, and the energy crisis is real. And, when you talk about the inequalities, this energy crisis related inequalities is also widening. So as a part of energy, this energy infrastructure, as a part of this economic stimulus packages, we have supported, the people belong to the low-income households through the energy infrastructure. We provided them the clean fuel, but the global narrative of, how you're going to do the just transition, that's not yet clear related to the energy crisis. And that's going to be the predominant, narrative which India is going to put forward. So that's my limited take on it. And also, even if we move towards a non-conventional energy like solar, after 1 decade or 2 decades, then, disposing the solar panels, that itself is, it's a nightmare. So whether that will not affect the environmental regeneration, whether that contribute to environmental degradation. So, you should look into the long-term perspective. So we may take a decision right now incentivizing the solar panels. We will move towards the non-conventional energy, but after a decade or so, what kind of environmental degeneration that's going to create? So those narratives, those kind of debates and discourse, that also needs an emphasis, in this context. Otherwise, it's going to be one-sided. That, of course, electric vehicles, you give more incentives right now. That's also creating a kind of a downturn in the secondary sector, in the manufacturing sector, because we don't have any policy certainty when we were supporting the climate change and the electric vehicles, EVs, and we are not supporting the vehicles or the manufacturing sector, then at the same time we are asking the question why there is no recovery in the manufacturing sector. These are all inconsistent to each other. So that policy certainty and consistency is also equally important when we talk about the climate change commitments and the growth recovery process. So these are my two limited points to Sahan. And Firdaus' question about China. Excuse me. China is in trouble, Firdaus, because you can understand that the articles related to the real estate, what's happening, and the middle class people, they are revolting, and the kind of things happening in China, that's not quite okay. In the sense, there was quite a bit of investment that has happened in the real sector, in the real estate was booming, but right now, those kind of unfinished projects in China, and they are using this money to, initiate new projects, not finishing the existing projects. So these are all creating, dissatisfaction in people, and they are in mess. And actually, you understand that it is very tough to get details of what's happening in the Chinese economy or the Chinese policy front, because you understand the iron curtains. Even in the case of COVID, the world came to know that quite late. And right now, there were a lot of apprehensions related to, the return of their leader, and the leader was missing, or, kind of assumptions and political things, we were going through. But it's very tough to get the Chinese policy, public policy narratives, or what exactly is happening in the Chinese economy. With a lag only, we will be able to understand what exactly is happening in China. But whatever is available, from that, what we can make out is things are not quite all right in the context of the Chinese economy as well. And the protectionist policy is not quite acting quite positive over there. And wait and see to get more details on the Chinese economy. And question related to the micro level question related to, I forgot for those that question. You mentioned about a micro level policy question. Yeah, it is related to the poverty and inequality. You can tell me. Yeah, can you repeat that question for me, please? I forgot.
Yeah, thank you very much. It was about that, we are talking about digitalization and economy is transparent, and there is, great impetus of growth and development as the economy at macro level. But it develops, the problem of inequality between rich and poor, because rich people are easily adopting the new technology, as what has, what was the experience of COVID-19. The students who were belonging to rich families, they have adopted quickly the digital aspect of attending online classes and teaching learning process, while the poor were sufferers of this pandemic a lot. So talking about the economy as a whole, so digitalization one side gives us growth and development, it develops the economy, but other side it widens the gap. So are our policies in line to tackle the problem of widening gap between poor and rich? And can we say that digitalization is creating discrimination in the distribution of development?
Absolutely. I can't agree with you more, Firdaus, because you are right. When we talk about the digital infrastructure, digital currency, your question related, can it widen the inequalities? Of course it can. Digital divide is quite huge. Unless we tackle the digital divide, then digital currency or digital infrastructure will not create wonders. And you took the example of the education sector. I will add financial sector later, but let me support your statement that education sector, of course, this enrollment ratio has come down because of the digital divide, and the students' learning loss was quite huge because of the digital divide in the time of pandemic, and we have not tackled that. And as you rightly pointed out, unless we tackle the digital divide, then education sector or whatever, it is not going to, be effective. Your point is well taken. And now let me add to that point, the financial inclusion. As I mentioned earlier, Janet Allen's point that digital currency will strengthen financial inclusion was based on the assumption that there is no digital divide. But of course, in a country where the digital divide is quite predominant, then it cannot lead to financial inclusion. And we talk about the cost of credit versus access to credit in terms of financial inclusion. We thought that the cost of credit matters more than access to credit. So the policy prescription to take the poor on board was by decreasing the interest rates or even providing the loans interest-free to the poor people. But that didn't work. And very recently, we started looking into access to the credit. Earlier, we thought that the peer monitoring models through the self-help groups, that they create a forum, they hold the savings of the poor people. Then, through that peer monitoring models, we will give the access of poor people not to the banking sector, but to, financial investment or financial sector decisions or financial inclusion. But that was quite wrong. So I'm happy that, the present government is providing access for the poor people to the banking sector through digital infrastructure. But we need to tackle many issues, including whether those opened accounts are having zero balance, whether they are able to invest, whether they are able to tackle the financial empowerment. These are the questions we need to look into. So there, as you rightly pointed out, digital currency or digital infrastructure cannot do wonders unless we tackle the regulatory mechanisms and the digital divide itself. So that point is very well taken. And, another point is, if the policy narratives of a government is based on market access or market related principles, rather than believing the role of state in the field of education, health, financial inclusion, then also, in the time of risk and uncertainties, that can go quite wrong. In the sense, we believe that Adam Smith book, we believe that everything is invisible hand. Ad hoc configurations of demand and supply will create wonders. Everything is, the market will determine, and we are quite comfortable with that. But those policy narratives, if the market is given a predominant narrative in the time of risk and uncertainties, that kind of state business deals, or that kind of, you're not supporting the people, you're believing that the fittest, let the fittest will survive. If that is a narrative of the government, that market access and market, and don't believe in the state, role of the state, because the role of the state, as I mentioned, freebies, those debates are happening now regarding the role of the state. What is the role of the state? So I think we need to take a relook into these questions very meticulously, because in the time of risk and uncertainties, what all the things we call it as freebies, or whether those kind of policy narratives are important at the subnational levels in the cooperative federalism to tackle the humanitarian crisis, or are we calling those policy prescriptions as freebies? So these are the narratives we need to take a relook, so that this rich-poor divide, otherwise the rich will get richer and inequality will widen. We are not having policies to support the poor. So those, I think, a course correction is required, so that post-pandemic recovery, that V-shaped recovery will not be uneven. Digital infrastructure and digital currency alone, that narrative alone, or even that narrative of market determines, that cannot support people, because it's a human tragedy we have overcome. There is humanitarian crisis, and we have seen the numbers that inflation hurts, of course, poor. So, we need to have the role of the state needs to be re-looked into, and that course correction needs to be looked into to prevent or to lessen the gap between the rich and poor, which is happening in front of us right now. Yeah.
Okay, so thank you, Professor, for your patience and answers. we are having, let's if you allow me, can we take last group of questions we are having?
Absolutely, yeah, we can.
We have
half an hour more, right? Yeah, we can.
Yes. First, there is a follow-up question on Professor Soham initial question about the renewable energy and how it is gonna impact developing countries. So Jayendra Singh is asking, saying that in developing countries like India, having a huge informal labor sector, of course, which is gonna hamper their ability to get into the energy competition in the international community. So he's saying, do you think that instead of focusing on more policies that super technological and geo-engineering methods of climate change mitigation, would it be better that the developing countries push for policies that favor a more formal, safe, and future-proof industrial sector? That's the first question of Jayendra. Benita is saying that in news it was coming that there is a possibility for China and Russia to join together to have a new currency to trade with between themselves as a way to improve their economies. So do you think this, if this is really true, this is going to affect the global economy in your opinion? And I can see that Firdos again is raising his hand. Do you have questions? More questions?
Yeah, thank you very much, for all the answers. Actually, it was a great learning from the professor today. But I am having, I want to share, a little story of my research, if I may be, permitted.
In brief, please.
Yes, yeah. So yes, as Professor was, highlighted that, our policies are not in line to tackle the issues of poverty at micro level. What I have observed during my PhD research, when I have asked the, managers of the bankers, that government is providing free of cost, bank account, just like Pradhan Mantri Jan Dhan account and Mudra scheme without, any mortgage. Why you are not, practicing that? The manager, they replied, these are the cases from Lucknow and Calcutta. They replied that we know that because of asymmetric information, these poor people cannot repay these loans, and they are not worth to repay their creditors, and their income are poor. Their position is very poor. So therefore, as we managers at good position, we are doing this work to promote ourselves. We need more promotions. More promotions are possible when our banking, banking organizations show, profiters and grow. So why we will take this type of risk? So from that, yes, the professor has highly, mentioned those pointers that, the role of state and the role of the institution. So yeah, state should, I was trying to add these pointers. Thank you very much for all the answers. It was, wonderful learning from you, Professor. Thank you very much.
Thank you.
Okay, thanks for those. And so we have then these two. Okay, so one raised hand from Dr. Soham.
Hi, I'm sorry I couldn't speak then, and this is not really a question. I just wanted to say that I work in horizontal inequality and conflict, but honestly, the just transition that Professor Chakraborty you mentioned, and this particular thing that in 20 years that disposing the panels, if we are moving towards solar, might lead to a sort of problem, and these have opened some new ideas and for me to think. So thank you so much for your lecture. I just wanted to say that I won't take more of your time. And I would like to read up a little bit more and maybe get in touch and getting some more ideas from you. So yeah, thank you so much.
Absolutely. Thank you so much. Yeah.
Thank you, Dr. Soham. And Atiba.
Good evening, one and all. Thank you, Heba ma'am, for allowing me to speak. First of all, Lekha ma'am is not new to me because I've already heard one of the sessions that on which he spoke about gender budgeting and public expenditure. Ma'am, if you do remember that few days ago, I think in the last month only, you gave a lecture on gender budgeting and public expenditure in health sector. So I was there as a participant, and ma'am, then also you had a great deliberation, and today as well, ma'am. Thank you so very much for such an enriching and enlightening session. Ma'am, my question is very crisp. It is related to the country India. I want to know what is your take on the consequences of COVID-19 on, with special reference to MSME sector, in the context of a country like India. Of course, COVID-19 and its consequences will be felt for generations. I think that's my personal perception. But I want to know this from you, that what will be the consequences on MSME after the COVID-19 era gets absolutely over. Thank you, ma'am.
Yeah, definitely. I'll do that.
Okay, so that's these are all questions, Professor Lekha.
Okay. Thank you so much, Jayanta, Binita, Firdos, Soham, and Atiba. Thank you so much. Let me take up Jayanta's question first. It's related to, of course, the informal sector. Before getting into that specific question, I need to confess that we don't have data related to the informal economy. And even after demonetization, or even after the COVID pandemic, the kind of studies related to the informal sector we received. Of course, one of the studies, I forgot, Geeta Gopinath and her co-authors. I will give you the details. I can give it to Dr. Heba later. In that study, they use satellite data to capture what has happened in the informal sector. So that's the way it is. We don't have any data, and GDP or the economic growth data below the sub-state level we don't have. So a kind of innovative method in terms of empirical research is happening by using the satellite data or the nightlight intensity. So that's the way informal sector is studied. And in case of labor employment data, also informal sector, absolutely we don't have any robust studies other than a few micro level studies based on great primary surveys. Other than that, we don't have great work over there. Now, coming to the climate change commitments, I mentioned about the tug of war between monetary policy and fiscal policy related to the climate change commitments and what is the right kind of public policy response to that. And there, Soham also talked about the horizontal inequalities, how we are going to tackle. Let me connect these two issues together and put forward the intergovernmental fiscal transfer mechanism and link it to climate change. India was the first country ever to design an ecological fiscal transfers. In the sense, in the intergovernmental fiscal transfer mechanism, we have integrated a criteria related to the climate change, and that divisible tax pool was redesigned because it was a mandate. It was a TOR of the finance commissions to act upon it. So based on that integration of climate change as a criteria of the intergovernmental fiscal transfers, these fiscal transfers were redesigned since 13th Finance Commission, 14th Finance Commission. 13th Finance Commission took a decision. Of course, the mandate of the TOR was given to 13th Finance Commission also to incorporate climate change in the intergovernmental fiscal mechanism, but they preferred conditional fiscal transfers. That is tied to climate change commitments. But 14th Finance Commission was the first ever to take the ecological fiscal transfers, how to design that. And they have taken a bold step of incorporating the climate change criteria and giving a predominant weightage to that criteria to design the kind of fiscal transfer to tackle the horizontal inequalities. And that we need to accept that it was a great decision that India and how many other countries follow this ecological fiscal transfer. If you look into, of course, they may have conditional transfers, but in the major intergovernmental fiscal transfers, India is the first who designed the ecological fiscal transfer. So that was a predominant narrative. Now, how to tackle the other concerns. Transparency and accountability is important to tackle this climate-related questions, and how to ensure that. And predominantly, when we produce the National Adaptation Communication in November, one of the predominant narrative can be how much our country is spending on climate-related things. As you rightly pointed out, not in mitigation. Once the event is happened, we have a lot of budgetary concerns related to mitigation. But how much is there of how much our country is spending in terms of ex ante adaptation? That communication needs to be stronger, and we need to map that and give a number that this much is spending. And we need to look into the fiscal marksmanship of those concerns as well. Fiscal marksmanship in the sense, it's not just announcement by the government, against the backdrop of the Glasgow commitments, but how much that is getting translated. And if there is a deviation, we need to ask the question, what is it, cause for that deviation? Is that randomness, or is it due to the variation, or is it due to the bias? So that exercise needs to be done in order to get into the predominant narrative of what are the external support we receive. Because the moment we put forward the internal resources related to the climate change, and if you tell that, of course, 5% of the GDP or 30% of the total revenue budget we spent on climate, that is internal. But that doesn't opt out the kind of commitment the Western world has got. Because, earlier we always hear the concept of not in my backyard. There are a lot of things happened in terms of the developed countries. They develop at the cost of the developing, countries. So what could be the analytical framework to deal with these concerns when climate change is an international public good? It's not an internal or a domestic public good. So we need to look into this question from the analytical framework of climate change as an international public good. So there, one paper by Wallace Oates will be very helpful. And when he was talking about the reconsidering environmental federalism, he categorized 3 kinds of functions, setting functions to tackle this. In that setting function, the first narrative was climate change is an international public good. So those kind of commitments we need to deal with. The second setting function was there are certain concerns which has interjurisdictional spillovers. How you look into this interjurisdictional spillovers when we talk about the climate change commitments? And the third and the limited case was only the localized public goods, which is related to the climate change concerns. But predominantly now, when you look into all the studies or the empirical evidence, we are talking only about the third as a prototype case. We are not looking into the interjurisdictional spillovers and not talking about climate change as an international public good. So maybe that analytical framework can be quite helpful in articulating the case or the concerns related to the climate change in the context of emerging countries or developing countries. Now, let me take, thank you, Jayant, for that brilliant question. Now, let me take Binita's question. I'm very apprehensive about any other currency becoming prominent, just like the way the dollar is. Now the dollar is becoming stronger. And China and Russia, whether their cartelization, whether their, currency, those concerns, I think we need to take those kind of move with a pinch of salt, because I do believe that the dollar is, still the powerful currency in the world. And in the time of this risk and uncertainties, when the rupee was on the free fall, we even got into that narrative of trading in rupee, or certain, policy prescriptions where, thought about to do the trading in rupee or, not in dollar. Of course, we have the masala bonds where it is rupee denominated rather than dollar denominated. We do have certain things, but in the long term, how we can tackle that dominance of the dollar, especially when it's getting stronger, that we need to wait and see. And frankly, Binita, I don't have the expertise in the currency markets to answer your question, in a very bold manner that whether that move can be powerful. But with my limited expertise in the currency markets, I do feel that it is not going to cut ice. That's what is my limited take on that point you mentioned. Let's wait and watch how it unfolds. Okay. And thanks again, Binita, for that question regarding that global economy and its other currency, the currency other than dollar getting stronger if there is a cartelization. Now, Firdaus' question, and thank you so much for sharing the inferences from your thesis. I enjoyed that. And of course, I can't agree with you more. I do agree with all the points you mentioned. Only one point I want to supplement to your inferences is about the Ponzi schemes. When we talk about the financial inclusion, when we talk about the access of the poor to the banking sector or the formal financial sector, we also need to look into whether there's a kind of Ponzi financing happening to repay what they have taken from the good lemon. Of course, the access to the credit was done. The cost of credit was minimized. So we have tackled everything. The poor access the credit. Then what? Whether, they are able to do, some kind of income generation or economic activity or some prosperity related to that access to the credit or the financial inclusion that they experienced, or are they going back to the old trap of the indigenous money lenders, the Ponzi schemes within their village or their jurisdiction at a very high interest rate to repay back the good lemon or the credit they accessed initially? So we need to look into that. And the data supporting those inferences are limited because, there are a few cases which report the Ponzi finance or the Ponzi schemes experienced by the people who has access to the good lemon initially. So those data building needs to be done to understand that the process is sustainable. They are not going back to the bad lemons. And, in that Akerlof market for lemons, whatever you have narrated to me, I think it beautifully gets fit into that market for lemons by Akerlof in that, Quarterly Journal of Economics, that Nobel-winning article, in that analytical framework, if you can, place your empirical evidence or the inferences you have given, that can add a flair to it. So it's just a suggestion. You can take a look into it when you do the postdoc or anything. So that I particularly enjoyed the empirical evidence you shared with me, because it's whether Mudra or whether, Genthan, these are all not magical. Overnight, people are not becoming micro entrepreneurs. It cannot be a missing public policy strategy. These points are very well taken. Now, Soham, thanks once again for your appreciation. And of course, it's a long term. That's what I told Dr. Heba. It's just a beginning, and we can be together, in Twitter handle. You can give my Twitter handle to students. Of course, it's a long-term relationship. We can be in touch, and, time and again, we can discuss about, the things related to the economic policy. You're welcome to do that. Now, Atiba's question related to the predominant narrative of, economic stimulus package was liquidity infusion. Of course, that was a predominant narrative. But whether that has created magic related to the medium and medium enterprises, MSMEs, that's a question. And, you check the credit deployment statistics provided by RBI, and there, if you look into the credit deployment statistics, of course, the YOY, if you look into the growth, things may look greener. But if you look into the composition and the structure in which who access the credit, then we can see that it's not predominantly the medium and small enterprises who access the credit. So why they are not accessing the credit when the predominant narrative of the economic stimulus package was credit infusion? Why that failed? It is not only India. In any case, if you look into the developing countries, the predominant narrative of the economic stimulus package was liquidity infusion or the credit infusion. But when you look into the economic recovery outcomes, it is uneven. So that credit access was uneven. So whether that access to credit, whether they access the credit itself is a question, fearing, how they will repay. So those questions are matter of concern. And of course, Firoz also has pointed out this liquidity infusion, will that create further financial instability in the system in future? That question is also dealt in that financial stability report, which is published by RBI. The latest came in June. If you look into that stability statistics into NPA, there is a stress scenario. You can look into that, and things are not good because this Stiglitz has, has predicted this. If you look into that article by Stiglitz, he has put it in Project Syndicate, Stiglitz and Rashid, in that article, which economic stimulus works. In that article, Stiglitz rightly pointed out that this credit, related economic stimulus programs may boomerang, just like the way Vatika pointed out. Medium and small term, they may not access it, and they are in doldrums. So for that, what is missing in the pandemic packages, the policy prescriptions related to the poor income households, we have not yet addressed that, and the small business firms. They are in doldrums, and the small business firms, what is our policies? So that we have not done. We have focused on the growth recovery at the aggregate level, and the fallacy of aggregation has happened. Rich became richer, but we need to frame more policies related to the small and medium-term enterprises, because small business firms, their stories, we need to look into that in detail, because we have not seen the kind of setbacks they have gone through the COVID time. So that credit infusion will not answer. The credit infusion, if that is a tool to answer that, that didn't work. It hasn't worked. That's my take. It hasn't worked. Butika. No, Atiba, that's my answer to you. And thanks so much for that appreciation that you attended my public expenditure benefit incidence analysis and gender budgeting in health sector, in Calcutta. Thank you so much. And as I mentioned earlier, Dr. Heba, it's a long term. It's like, we will meet again. And thank you so much once again. Over to you.
Of course, thank you so much, Dr. Leka. And of course, thank you, first of all, thank you for accepting my invitation and insisting on giving the lecture on its time today. So I'm really thankful for you. I want to express my sincere gratitude for your time and having this patience to answer all questions of our participants today. It is really thankful from my side and from Gender Center for Global South. And I would like also to thank all our participants who have actively participated in today's discussion. So I'm seeing that there is one hand still raised there. If you would like just to say, okay, so Firdos is raising his hand, he's saying thank you. So thank you, Dr. Leka. Of course, we will keep in touch all, and as Dr. Leka has mentioned, we remain in touch on other platforms, not only here. And of course, I would like that we'll have physical in-person session very soon on campus, if you allow me, so we can have future sessions on campus as well. Thank you so much, Dr. Leka.
Thank you. Thank you so much. I can see Niti Jain's messages, 17 messages, I can see that. And thank you so much for this brilliant interactive session. And as Heba pointed out, I look forward to meeting you physically on campus later. Thank you so much and have a lovely evening. Bye. Bye, Firdos. Thank you so much. Bye.
Bye-bye. Thank you so much, Doctor. Thank you all.
Thank you. Bye-bye.
Thank you, Professor.
Thank you.